The worst financial decision in history usually weren't made during calm markets. They were made during panic, and regular people, they destroy years of progress in a matter of hours because fear takes control faster than logic ever can. And one bad headline hits, price drops hard, social media turns into chaos, and suddenly people who claim they were long-term investors start dumping everything they own at the exact moments money is buying. Your money starts buying. Panic selling feels safe in the moment, but in reality, it's usually locking in the losses, surrendering the future gains, and turning temporary volatility into permanent damage. The market has trained people emotionally instead of intellectually, and most investors, they say they want wealth, but what they actually want is certainty. And certainty does not exist in investing. And if you cannot emotionally survive the volatility, you will never financially benefit from the growth. You know, every major crash in history looked like the end of the world while it was happening. During the 2008 financial crisis, people believed the banking system would collapse permanently. And during the COVID crash, investors thought the global economy might shut down indefinitely. During inflation spikes, rate hikes, wars, and recessions, fear dominated headlines every single time. Yet markets historically recovered, businesses adapted, innovation continued, and disciplined investors who stayed calm were rewarded. Panic sellers missed the rebound because fear convinced them survival mattered more than the strategy. And one of the biggest mistakes people make is confusing price movement with actual value. If a great company drops 20% in a month, that does not automatically mean the business became worthless. And sometimes the business is still growing and revenue is still increasing. Customers are still buying and long term demand remains strong. The only thing that changed was in investor, investor emotion. Markets move on psychologically short term and fundamentals long term. And when people panic, prices can temporarily disconnect from reality. And that disconnect creates opportunity for disciplined investors and disaster for emotional ones. The stock market is essential, a machine designed to transfer money from impatient people to patient people. Most investors lose because they react emotionally or to temporary events instead of focusing on the long term trends. They buy when prices are high because excitement feels comfortable. Then they sell when prices are low because fear feels overwhelming. That is backwards. Wealth is often built by doing the opposite of the crowd, especially during the moment of extreme motion. If everyone around you is panicking, that is usually the exact time you should slow down and think more carefully, not less. Another reason people panic sell is because they invest money then psychologically cannot afford to see fluctuate. There's a massive difference between needing money in the next month and investing money for the next 10 years. And if your emergency fund is weak, your debt is crushing you. Or your expenses are unstable and the market volatility feels threatening. That is why financial preparation matters. Long term investing only works when you can actually survive the short term. Smart investors build cash reserves, diversify intelligently, and avoid putting themselves in positions where market downturns destroy their emotional stability. Preparation reduces the panic because preparation creates options. And one of the most dangerous influences during market drops is nonstop media consumption. Fear sells, calm does not. Financial media thrives during chaos because panic generates clicks, views, and emotional reaction. And every headline becomes more dramatic, every prediction becomes more catastrophic, and every temporary downturn gets framed like civilization is ending tomorrow morning. And if you constantly consume fear driven content during volatility, your brain starts treating temporary uncertainty like guaranteed disaster. And the problem is that most social media companies are rewarded for attention, not accuracy. And the loudest voices during crashes are rarely the wisest ones. Some of the best investors in history became the successful significantly because they remained rational when everyone else became emotional. Warren Buffett famously said to be fearful when others are greedy and greedy when others are fearful. That sounds simple until your fear becomes real. When your portfolio is bleeding, your emotions start screaming for immediate relief. Selling gives temporary emotional comfort because it feels like you're taking control, but emotionally relieves relieving decisions are not always financially intelligent decisions. And sometimes the hardest move psychologically is the smartest move financially. Discipline matters more than prediction because nobody consistently predicts the market perfectly. And you do not need to predict every crash to build wealth. You need a strategy strong enough to survive them. And this is why consistent investing beats emotional timing for more people. And investors who regularly contribute through good markets and bad markets often outperform people constantly trying to guess the perfect entry and exit points. Dollar cost averaging removes the emotional decision making because you continue investing regardless of the headline. And instead of trying to outsmart every market move, you build the wealth through consistency and time. And time is the most powerful force in investing, but panic selling interrupts compounding before it can even fully work. A temporary crash only becomes catastrophic when you permanently exit at the bottom. There's also an identity issue attached to selling as well. Many people secretly attach their self worth to their portfolio value. And when the market drops, they feel personally attacked like they failed. But investing is not about proving intelligence every single day. Even legendary investors experience massive downturns and periods of uncertainty. And volatility is not evidence you are failing. Volatility is the price you pay for that long term return. And people want the returns of investing without tolerating the emotional discomfort attached to it. That is unrealistic. If markets only move upward smoothly forever, everyone becomes rich effortlessly and opportunities would disappear. The reason long-term returns exist is because most people cannot emotionally handle the journey required to achieve them. You know, fear creates the opportunity because fear causes irrational behavior. And the next time markets crash, remember that your emotions are not reliable indicators of your future outcomes. Humans psychologically evolved for physical survival, not investing, and your brain interprets uncertainty as danger, even when patience would statistically benefit you more. And the emotional impulse to escape that discomfort is natural. But successful investors often require resisting natural instincts. And the investors who usually win are not necessarily the smartest people in the room. They're often the calmest. And they understand that downturns are normal. Recessions are temporary and emotional decisions are expensive. So instead of obsessing over daily fluctuations, they focus on the decades instead of reacting to panic. They follow the systems. Instead of asking whether markets will ever recover again, they study history and realize recovery has repeatedly happened after other major collapses. Nobody knows exactly what markets will do next month, or even next year. But history consistently shows that panic selling during fear driven moments is one of the fastest ways to sabotage long term wealth. The people who build real financial strength are usually the ones who stay rational while others lose control. And when everyone else is sprinting towards the exit emotionally, disciplined investors remember one critical truth: temporary fear should not dictate permanent financial decisions. Thanks for watching today's video. If you found value in today's video, all I ask is subscribe. We're looking to build this channel, and without the subscription base, we just can't do it. So please do so, and we'll see you guys tomorrow.